Good morning. Welcome to Stock Market Today. It's Wednesday, May 13th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today where you can sign up for an email where I get a lot of the content for this show as well as give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So U.S. equities closed lower in Tuesday's trading, weakening into the end of the day. All sectors finished in the red. Staples outperformed along with utilities. REITs were the biggest loser, followed by industrials and financials. Treasuries were stronger with the curve flattening. The dollar was weaker on the yen and euro crosses after a strong move higher on Monday. Gold finished up 0.5%. WTI crude closed higher by 5%. As we get to the desk this morning, futures have reversed course. They're up about 70 basis points in early trading. Asian markets were mixed overnight with China and South Korea gaining while Japan fell. European markets are under some pressure here this morning. Treasuries are mixed with some strength at the back end of the curve. The dollar is mixed on the major crosses. Gold is down 10 basis points. WTI crude is down about 1.5%. And as we look at the structure for the S&P, what jumps out at me is, aside from the obvious failure at resistance that we've been highlighting, is just we've basically gone nowhere for a month, right? Back in this time frame right here, that's April 14th. So we've kind of gone nowhere in a month. We had a late fade from resistance to keep the index in the range that we've been highlighting. Initial support, 2750 to 2800, still very much in play. 2485 to 2660 is what you have to start thinking about. Should we break below that initial level? Resistance in the 2950 to 3000 zone, lowered the top end of that zone to coincide with a declining 200-day moving average that now sits at about 3000. The 13-period CCI, not overbought, not oversold, fluctuating towards the top end of the range, but not at an extreme level. Chaikin money flow continues to dip bearish, especially when you see a sell-off like we saw yesterday late in the day to close near the lows of the day. So very much a mixed picture as far as I'm concerned, both from a trend perspective, from an indicator standpoint. We've highlighted the key levels, and I think kind of in between the moving averages, if you will, if you really want to widen it out. It's just frustration, right? Just kind of grinding. This is the type of activity that chops you up without a clear trend, but it is a great opportunity to go out there and identify the stocks and the industries and the sectors that are outperforming as opposed to those that are underperforming. Tune into my work on Tuesdays where I do a deep dive on sector rotation and really every day where I'm trying to highlight what's leading and what's lagging. Diving in now to our market in a minute. What are we writing about in the note today? Well, we talk about that fade from resistance. Really stemmed from Dr. Fauci's comments about concerns on economic reopening at the state level. The Qs faded from the February gap down, and that gap down I think is important because that was the opening gap back around February 24th that began the market swoon. Sentiment is mixed on the week while speculators remain largely net short. Transports are on the verge of a breakdown, and I think that's important. It's one of the key areas that I'm watching for a quote-unquote reflation trade or lack thereof. And as I said, futures do point to a higher open here today. Turning now to the major indices from a power bar perspective, the Dow was the best of the bunch yesterday, only losing 1.9%, one bull of 15 bears there. S&P 500 loses about 2%. Power bar ratio weakens 48 to 171. NASDAQ, a like amount, down about 2%, 25 to 18. So still a bullish power bar ratio there. Small cap sees their ratio flip back to the bearish side of the coin. 309 bullish stocks or 360 bearish stocks after that group lost over 3.5% yesterday. Flight to safety sends the bonds higher, yields lower. And we do note that Fed Chairman Powell is scheduled to speak today at 9 a.m., whereas he's expected to throw some cold water on the prospect of a negative interest rate policy here in the U.S. Recall last week, Fed fund futures started pricing in the prospect of negative rates at some point over the next year or so. So according to the Chaikin Power Bar, large cap stocks are more bearish than small cap stocks. The major markets are mixed. Let's hit our stock of the day now, because this is an interesting one that I've been highlighting of late. Green Dot. a lot of people have been paying attention to the payments names, especially in and around peer-to-peer and person-to-business payments, and a move away from actual cash currency in favor of technology. And Green Dot is kind of an overlooked name in that realm, right? We all know PayPal, we all know Square, but Green Dot plays to a slightly different demographic in that space, and it's an interesting name to me. Very bullish Chaikin Power Gauge rating, strong trend, but consumer finance is a weak industry group. That's fine. Green Dot did report earnings and the stock gapped higher yesterday to take us out of this kind of near-term consolidation here. What's interesting to me is the relative strength started to pick up ahead of that earnings report, right? We are oversold, overbought, oversold indicator, rounding out of an oversold condition. Chaikin money flow is mixed, but tweaking towards the bullish side of the equation, and we are above the trend line. So this is, if I think about shifts coming out of COVID-19, right? We all know PayPal, we all know Square. They are bellwether names and they're performing well. But I've been trying to dig in and look for some of the under the radar names, and Green Dot certainly fits the bill there. Definitely think it's worth doing some work on, paying attention to, and seeing how that could potentially fit in as a long idea in portfolios. Let's hit our sector tracker now. Moving to the major sectors over the last 5 days. Tech at the top of the list, largest weight in the S&P 500. Comms as well. Remember, tech and comms is where a lot of the fan mag names live, as well as discretionary, considering Amazon is close to a quarter of the consumer discretionary group. Energy also at the top of the list, and what I'm considering a counter trend rebound, but we are still, as I've said, we've sat up and taken notice of the strength in energy of late. In the middle of the road, staples, healthcare, materials, and industrials. Towards the bottom of the list, financials, utilities, and real estate. Real estate obviously has its idiosyncratic risk, and it really speaks to kind of diving in and understanding the dynamics that are at play at any given time, because a lot of people's knee-jerk reaction would be that real estate is a flight to safety type play. But, if you think about what's happening in commercial real estate, if you think about what's happening in terms of office real estate and retail and malls, you can understand why the REITs have been under pressure. Financials, we've talked about them a lot over the past few days, as that group remains under intense pressure, both on an absolute and relative basis. Turning now to our industry in focus, and it kind of paints the picture, right? If we're looking for strength in the market, we know it's in the technology space. The NYSE Technology Services Group, ticker symbol XNTK, the ETF to track it, has outperformed the S&P 500 by over 21%. And its power bar ratio, which measures future potential, is strong, 7 bulls to 5 bears. It's currently ranked number 6 of 21 subsectors. Has moved down 2 slots over the past week, but still, in the top third or so of the groups that we track. So some of the names there that makes sense to maybe do a little extra work on. VMware has a very bullish Chaikin Power Gauge rating, ticker VMW. JD.com, ticker JD, with a very bullish rating. And we all know Mr. Softy, Microsoft, MSFT, with a bullish Chaikin Power Gauge rating. If we take a look at the group, you can kind of see the dynamic that's at play. Bullish rating, bullish power bar ratio, strong trend above the trend line. But we're going to look at the Qs a little bit later, and this group lines up with what we're seeing in the Qs, a rally back to this gap, and this was the gap that kind of started the big swoon in the market. We'll take a look at it on the Qs later. But the group has been an outperformer, and the intensity of its outperformance has been picking up of late. Bullish money flow, closer to overbought than to oversold, right? So given the gap, getting close to overbought, just something to keep in mind. But I think this is an area of the market where you want to be looking for potentially bullish ideas. And then it's just really a matter of framing them up and getting, the optimal timing for your strategy, for your time frame, et cetera. But certainly mindful of the gap that's opened, and we'll take a look at it in a little more detail as it relates to the Qs a little bit later on in the show. Let's hit our trending names now. OKE, no real news yesterday. Stock up nearly 5%, caught a downgrade today. AMCR earnings report sent that stock higher by 3%. AbbVie, some positive comments out of JP Morgan yesterday. Remember, they closed their deal for Allergan, so the banks, potentially the banks that were working on that deal and in a quiet period have now started to comment, and generally the commentary has been bullish. General Mills up 2.8%, neutral stock, and McCormick up 2.3%. Also a neutral stock here at Chaikin Analytics. But as I said, the staples were strong yesterday. The food stocks had a decent day. These stocks went along for the ride, up 2.8% and 2.3% respectively. Loser side of the board, CBRE, getting back to what I was just saying about REITs and commercial real estate, down nearly 9%. Dentsply reported their earnings and also announced a mixed shelf that took 8.25% out of that stock. Let's get back into retail a little bit here. Ulta with a bearish rating. One of their competitors reported earnings yesterday, took Ulta down 8%. ALB caught a downgrade at Goldman Sachs to take 8% out of that stock. And Franklin Resources, Ben, B-E-N, reported some data on their AUM, their assets under management for the month ending April 30th. Investors didn't like what they heard there. It would seem they took 8% out of the stock on the day. So let's dive in. On Wednesdays, we touch base on sentiment, see kind of what the general mood of investors is. And what I would say is that it's mixed. Now, much less fearful, but still mixed, right? The CBOE equity put call ratio back down around the level that marks kind of normal ranges or the lower bound of normal ranges for this metric, of which I use a 13-period moving average. Really kind of 0.6 to 0.75 is a range that's normally, you start extending above or below that, you're getting into extreme territory. And you can see it here, right? Back at the start of the year, we were extremely bullish. Back at the lows in March, we were extremely bearish. Right now, we're back towards much less fearful, obviously, still inside the range. But I think if you're a bullish investor, you prefer the tailwind of overly bearish sentiment. Now, if we take a look at the VIX has certainly come in, right? And I'm giving you the VIX here in a couple of different ways. First, the regular VIX, and the gray line, the blue line is the 10-period moving average. Now, you can see we've come down from extreme fear, but we're still up around the peaks of some of the previous bouts of volatility spikes in the past 5 years. So getting towards normalization, but still not quite there yet. And if we take a look at something like the CNN Fear and Greed Index, which I do highlight in my note, that's back down in a fear position, or remains in a fear position. So a little bit of a mixed bag as it relates to sentiment. Sentiment is one of those areas of the market that, you know, for the most part, it's not really telling you much. Becomes interesting at the extremes, right? Big spike in the put call ratio, big spike in the VIX, where you start thinking about potentially looking to take the other side. Right now, not a huge message, largely mixed, which I guess makes sense given the fact that the S&P 500 has largely gone nowhere for the past month. So, you know, maybe it's just confirming the choppy action that we're seeing in the market of late. So let's talk about the Qs here, right? We looked at that ETF for tech. Let's look at the Qs, QQQ, the Invesco Trust. Big rally and has been market leadership off those March 23rd lows, and now takes us back into the gap. This is the gap that opened. Remember, here's Feb 19th, right? Started to roll over a bit, and then we had the big gap down that preceded the decline in the market. Now we've rallied all the way back into that gap and actually faded out of it into the close yesterday. That 13-period CCI closer to overbought than it is to the middle or oversold, while at the same time, Chaikin money flow here as well has dipped into bearish ranges. So similar to what we saw for the S&P 500. Now the Qs from a major market perspective remain the best game in town. A bullish ETF power gauge rating, 25 bullish stocks, 18 bearish stocks. But I think we have to be mindful of what's going on here as we start to frame up risk reward from current levels. And one of the areas that I said I'm watching closely as it relates to a potential reflation trade is the transports, the IYT transport ETF has a neutral rating, but notice no bullish stocks and 12 bearish stocks as the fund is now wrestling with its declining 50-day moving average. Moving towards the lower end of the range on the CCI, Chaikin money flow, bearish potential for those of you who look at the patterns, potential head and shoulders here with a neckline at about 140. So I think 140 is the key level, as the transports could potentially be on the verge of a breakdown. And if you're looking for, kind of broadening leadership in the rally, or a reflation trade, I think this is one of the areas that you have to pay attention to. And a breakdown here would kind of throw water on early thoughts of a reflation trade beginning to play out. That'll wrap us up for today. Head over to chaikinanalytics.com/test drive for a free 14-day trial. I'll be back with you tomorrow.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.